Hey guys, so per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So I'm seeing a lot of odd analysis out there and a lot of people are asking what's going on. So let's look at a chart live from your nation's capital, Washington, D.C. Okay, so weekly, I talked about this in the last video. Again, I'm still concerned if we get a higher high here, we're definitely getting a bear div. I mean, it's got to go so much higher with a lot of strength and volume and etc. to not get a bear div on this, which is not saying it's impossible that it's going to go to, you know, previous all-time high and pull back from there, but gee, that's just concerning for me. So again, this is me building the bear case, okay? I'm going to continually build the bear case / pullback case until people start to believe me because I just feel like people are going to get trapped so hard up here. I have no leverage longs right now. I'm just in spot. So that's one part of the bear case, beginnings of a div here, okay? Second part of the bear case, this could potentially be a, sorry, let's bump over to China. This could potentially be a cup and handle forming here. That would mean we'd get a pullback here around 5K, 5,100, something like that, to around 4,400, ideally. And you can see that sort of matches support here as well. It matches the 50% fib. So that's a good pullback. Now, a lot of people aren't going to like that. I might be completely wrong here, but that's one reason. Another reason for a pullback is if you look at, let's just put on a horizontal line here. You can even put it up here if you want. Take Ichimoku off. So we have this, there's 1,000 ways to draw this, but there's definitely some sort of head and shoulders action going on here, okay? Typically, it doesn't always break out the first time testing the neckline. Sometimes we get this thing called a throwback where it'll sort of fake out, break out, dip below the neckline slightly, and then take off. That's also another option. So again, we might make a higher high here, but it just doesn't look like it has the strength to just keep going. Now, if you compare it, like just look at these candles compared to, you know, where we currently at on the weekly. They look pretty similar in strength and size. We are getting lower wicks. You can see how we're pulling up from here versus here, how each time we have a higher open, higher close, however you want to say that. So this picture is definitely stronger than the current picture, just, you know, subjectively based on that. So that was weekly. It's definitely bullish. I just don't think it'll keep going right now. Okay, so let's go to daily. Now, I pointed this out yesterday on Twitter. It looks different on Stamp. This would be considered a long-legged doji, which is generally similar to a spinning top. It's like a reversal sign. You know, buyers and sellers have sort of come to an equilibrium, and buying has halted, basically. However, this could have just been the monthly close shenanigans. Anytime you get a big candle close, like a monthly close, weird things tend to happen. Weird things happen on the weekly close as well, daily close, things like that. So maybe that was just that. I don't know. We'll see in a few days. But at the moment, it doesn't look as bearish as it did, obviously, then. But it's still concerning for me because we're getting higher highs. RSI is not following through. So there's beginnings of a bear div here. This candle hasn't closed yet, so you can't call it a bear div. Technically, you can't call it a div until even the next candle's closed. So it's got plenty of time to cancel out any sort of divs on at least the daily. That's in China. We go to Stamp. Let's take a look. Again, same story. There's a lower RSI, higher price. That's a bear div. Another concerning thing is distance from the Kijun, which is the equilibrium point. If I look at current price, we're about $73 away from the Kijun. If you just compare that to recent activity, when we get craziness like this, $166 away from the Kijun, that signals a strong pullback potential reversal. Now, it doesn't always mean reversal. It can just mean sideways. You can see here, we were about $75 away from Kijun and we just held sideways. So when we're that far away from the equilibrium, we either go sideways or we pull back to the equilibrium. It doesn't mean the bull trend is over. It just means things slow down for a minute. Similar to here, you can see we just rode this Tenkan, the quicker EMA, until we flattened out, hit the Kijun, and then blast off, okay? So I'm expecting that again on the daily. We're getting farther and farther away. RSI is overbought, and yet it's still weakening. So that's daily, okay? Again, not bearish overall, just weakening momentum. And I think people need to, I think this is going to 1300, definitely, by January 1st, okay? But in the moment, if you're leveraged along, again, just be careful. Don't get trapped up here, because someone's gonna eat your lunch, okay? So that's daily. Let's go to 4 hour. And again, let's look at RSI. We're getting a higher high in price, a lower RSI. Okay, this one's definitely confirmed bear div, in my opinion. That's a problem for the continuation people, okay? Again, all you're doing is assessing probability of continuation versus reversal. When I see bear divs, that lends itself to the reversal / pullback / sideways column, okay? This isn't bull trend is over. This isn't, short it right now. This is just, is it going to continue? The probability says no over yes, just based on that, okay? That's one thing. The other thing, again, distance from the Kijun. You can measure this yourself. Just hold shift, click. So 274 CNY. You can see here it was 192. So it's going to want to reach for this Kijun. It's going to want to touch the Kijun. This is the beginnings of what's known as a C clamp, okay? Anytime you get a C clamp, here was an example of one. Basically, you just get a flattening of Tenkan and Kijun. Price flattens out. And again, either price catches up with the averages or price moves towards the averages, more likely than continuation or higher highs, okay? And I mentioned this in the last video, every time I make a 3 drives chart, Bitcoin loves to make a 4th drive. Now technically it sort of did on the lower time frames. If I look at yearly pivots, you can see in China, we bounced pretty beautifully on the yearly pivot several times. Next yearly pivot is way up at 6,200, okay? What does that look like on weekly? Let's just take a look. Yeah, so that's that's definitely bubble territory. Anyway, flipping to stamp for 4 hour, again, C clamp, bear div, higher high, lower low. That's a problem for continuation. The trend looks great. When cloud is thin like this is exactly what you want to see. That says we're definitely in a bull trend, obviously. I just want some pullback more than this. I might not get it, but the higher this goes without pulling back, the stronger the evidence towards pullback versus continuation. And the more violent the pullback will be if we don't ever touch the Kijun. And then let's just look at yearly monthly pivots on stamp real quick. You can see we're approaching the monthly R1, which just opened today, okay? 741 on stamp. What does it look like on weekly? Let's just take a look. Not really a significant zone, in my opinion, historically. Yeah, a few wicks here. I'm just looking to see if there's any significance on prior candles. Let's go to yearly and check how far away we are from that. So it appears as though we cleanly broke the yearly, which is definitely a good sign. The next yearly pivot is 920, which is the next target up. The other reason I think this is going to pull back soon is that inverted head and shoulders that I talked about in the last video and a few times. It's getting close to the 760 mark. We should get horizontal resistance here, just based on this prior market memory principle. Okay, so I was going to make a video last night on the 2 hour and 1 hour. So this is the 2 hour China. I know I'm flipping a lot here. And again, we're getting higher highs, lower strength over and over and over again. This is the fourth test higher with lower strength. One reason that you should have gone long, that I should have gone long, I just didn't believe in it. If you look right about here, maybe this was even too late in China. So yeah, it's telling you to take a long all the way up here. What I'm looking at is the TK cross, okay? So the blue cross is the faster, the blue line is the faster EMA, the Tenkan. Red is the Kijun, if you've never heard of the cloud before. So the basic idea is you open it on the cross above the cloud, okay? That's a bullish cross, blue over red. And then you close it when there is a red over blue. That's how you quote unquote properly trade the cloud, just using the cloud alone. Now, sometimes that's a slower close than you should otherwise have if you want to maximize profit. You can see that in here, closing it at 47.78 from, let's say, even got in at 4,500. Okay, that's a pretty decent trade for a 2 hour. So what I was saying was the next part of the cross is when you get a cross, a bullish cross above the cloud or a bearish cross below the cloud, those are the strongest signals you can get in the Ichimoku cloud system for re-entry or entry of a trade. Aside from what's known as the Kijun bounce, where you get a test of the lower, slower EMA, okay? You always want to have your bids here. I have bids here. My current bids are on the 4 hour Kijun, in this region. And I have some on the daily all the way down here. Just because based on cloud principles alone, we're going to hit that zone eventually. Which is why I like to have the knife catcher bids right there, okay? Something I sort of pointed out last night as well, there's a head and shoulders, inverted head and shoulders situation going on here. Take on volume. The problem is the volume should be descending. Again, China, it's hard to judge what's really going on with volume there. But if we look at 2 hour stamp, let's take the pivots off. Again, you can see shoulder, head, shoulder, not really descending volume, so I didn't really buy it. Obviously, if the pattern is there without the volume, it doesn't necessarily mean it doesn't exist, but it means the probability of it breaking out the way it should is definitely lower. Okay, you want to check all the boxes when you're looking at these patterns, especially the volume. A lot of people just ignore that. So here's the 2 hour stamp again, just with the TK crosses. You can see open 632, close 697. So that's what, 60 something dollars, right? $63 trade. That's a good trade. And then it's having you reopen again, which is what I saw last night. I thought about making a video, but I didn't believe it myself. It's having you reopen around 707. So, and it's still having you in that trade because there's no cross yet. Now, this may just flatten out and then go down, which I think is what will happen, because again, we keep growing this bear div. Now, it's completely possible that we're in a territory that's just going to go parabolic and ignore bear divs on every time frame. Okay, but if we get a bear div on the weekly, like I think we're going to, that's going to eventually need to be cleared somehow. So, that might be a pullback to 465 2 months from now. Who knows? But eventually that's going to get reckoned with, okay? And lastly, let's just compare the Chinese and stamp on the hourly. Again, we're getting divs. This isn't as big of a div as the others were. If you ever want to just full screen anything, just double click it. If you ever want to auto lock the numbers, just double click those. Excuse me. So you can see we're getting lower strength, okay? It's not my imagination. Definitely weakening momentum. doesn't mean, again, it doesn't mean it can't keep going. It just means we're getting a weakness in buying, and you know, it's just weird. It can't keep going like that forever. And it's not resetting either, which is interesting. At least on the hourly. How would it look if it was resetting? It would probably go below 30 on the hourly if it was resetting. Again, I'm not an expert with oscillators, but I do pay attention to bear divs. So like I said, on the 2 hour, you're waiting for a recross on the TK lines. So we had the cross here at about 4,800. That could be a long entry signal. It's not above the cloud, but it's probably good enough. On the hourly, if we turn the price back on, you'll see that anytime we sort of dip into the cloud, that's trouble as far as for the bull case. The cloud is generally considered just you know, indifferent or cloudy. The outlook is cloudy, okay? When you're above or below the cloud, that sort of signals a trend or continuation. So the fact that we dipped into the cloud and then bounced up out of the cloud, made a higher high, is definitely bullish. But again, RSI is telling us we're in trouble here. So that's China. If we go to the stamp hourly, it looks a little cleaner. You can see again, we're getting these long wicks into the cloud below, into the Kijun, which is good. It looks super bouncy. Stamps book is a little thinner than China, so I think that's why we get candles like that. And again, on the hourly, we bounced into the cloud. So if you're definitely, if you're on leverage and you're not closing, you know, when the TK cross happens, you're definitely closing when there's a candle that closes in the cloud. At least that's what I'd be doing. And again, you're getting a re-entry signal, 707. A close would be, a great close signal would have been all these wicks up in here. When you're seeing 3-4 candles that are trying to make higher highs but don't, that's a signal, in my opinion, of heavy resistance. This trident thing is also some sort of pattern. I just don't know the name of it. And again, we have 4 drives making lower highs in the RSI. So that's a problem. Pullback for stamp, the target is probably 666. It's another psychological level. I haven't mentioned this, but 5K, CNY, definitely a psychological level for Chinese traders or anybody, any even number. So it's interesting that the 50% fib of this move, roughly, unless you want to draw the fib down here, I don't think we're going to go lower than the previous triangle support resistance line, which is why I like 666 or 650. Anywhere between 650 and 680 I think would be a great pullback. Then we'd get this sort of cup and handle thing. So all this is sort of screaming to me, we're going to pull back. I don't know when. If this goes much higher, it'll pull back more violently. You may disagree with me. Let me know. Hit me up on Telegram, Twitter. Like, dislike, share, subscribe, donate, comment below. Let me see your charts. What do you guys think? Happy trading.